On June 4th, 2026, the biggest macro data point was not an earnings report, it was the labor market. Weekly jobless claims rose to 225,000, the highest level in about 4 months. Productivity was revised down to 0.3%. Unit labor costs were revised to 1.8%. So the macro message was mixed. Labor is softening at the edges, inflation pressure is not exploding, and rates did not panic. So disclaimer time real quick. This is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through my own trade architecture. Also, please hit subscribe. I'd really appreciate it. It helps me make these videos, and just follow so that you can see more trades. Please leave a comment, anything else you'd like to see, and check back often. So back to the markets here. Like I said, rates didn't panic. So if we just look at TLT real quickly, it held up about 0.22% up. So almost a quarter of a percent. It closed very nicely at $85.50, and it's starting to have this island reversal that I'm always looking for there. And this is even after a dividend distribution date. So I'm liking this a lot. But I'm also a big bull on TLT at the moment, but we don't have to get too far into that. Let's jump into the indices. So SPY up about 0.38% today, 38 basis points. QQQ underperformed. It was down 0.5 percentage today, whereas the Dow was up 167 basis points, or 166 actually, we closed down there. And IWM closed at 1.5% up. So, if I had to sum this up in one sentence, it's that the Dow and the small caps led and the S&P held up while the Nasdaq led. So it wasn't a market dump. It was more market rotation like we've been seeing. The money's moving out of the crowded AI mega cap and semiconductor exposure and into financials, healthcare, small caps, and select enterprise software. So let's jump into the sectors now. So today I'm going to do it a little bit differently. I'm not going to go through every one of the ETFs to go through all of the sectors. Instead, I'm going to choose 3 main sectors there and look at ETFs that represent them. So the first is going to be SMH, and semis were interesting. It was down about 1.6%. It was almost entirely dependent or because of or related to Broadcom's earnings, which interestingly enough, even though they were down 12.5% today, and at one point down much further, they were within the bounds of their expected move for the week, I believe. And not only that, they're hitting previous resistance, current support, it appears to be. So I wouldn't say that this is the end of the world. It's just that the company, didn't. The market wanted a cleaner AI upside surprise, and Broadcom didn't give investors enough of an upside surprise. And so the danger that always happens, so just to talk about that one more second, is really the expectations, more than the underlying fundamentals there. And so that's the danger about tape like this, especially when the semi trade is so extended. These types of earnings, they have to facilitate that next leg up if they're going to continue. Not to say that sometimes they don't just actually consolidate up there for a while, but I don't think that this was too much of a pullback given everything, even though it may have felt like it if you were leveraged long on this name. And so, the danger of this tape is that the AI demand can be real, but if the stock is priced for perfection, good is not good enough. And I think that's what's happening here today. And so next, let's look at XLF. And financials were up in a nice way. 2.5%, basically 2.59. And it's a major rotational signal to me, even though it's been consolidating for a while. But yesterday I was concerned about it being down, especially when XLE was outperforming SPY. But that's not the case today. And so financials weren't just bouncing randomly. When the Dow is leading, small caps are up and financials are strong, the market is telling us that the money is rotating into broader cyclical exposure instead of hiding only a mega cap tech. And in the case of recently, not even all mega cap tech, which provides another opportunity, which is some of the trades that I've been watching, and we'll get into that next. So XLV, oh man, that was the bigger winner today into that rotational trade from my vantage point. XLV was up about 3.07% today, and healthcare was just one of the cleanest leadership groups. So the sector read in general, if I had to sum it up, was SMH showed stress in a crowded AI chip exposure. XLF showed rotation into financials, of course, and XLV showed defensive and quality rotation. So it's very different from a broad risk off, sell off. So yeah, now let's talk about the stock stories that matter today. So the first is Broadcom, obviously. I already touched on it briefly, but just to give a little bit more about what happened. The move is important because it pressured the whole semiconductor complex, but the AI trade didn't completely break, and that's because NVIDIA did hold up. And so I've been talking about this trade for a while. I've been going short semis, or starting to build a position short semis using stocks, and going long NVIDIA every time it dips. And today was one of those great things. I use pivot points to trade, and I can do a video on that. But if you had been watching, we came down into the lower S1 at the same time that on the GEX, there was a lot of positive GEX up top at R1. So I put on a few calls and hedged by going even longer short stocks. So going long stocks to hedge against the entire semiconductor trade, and to go long on NVIDIA based on a day trade and some valuations. But NVIDIA, I think we are going to be consolidating for a little bit longer, but you can see I have an order down here, and that is essentially for a cash secured put if we are to fall much further, because I still like this as far as semi goes, especially since I am hedging using stocks. The next stock story was MRVL, and the reason that I found this to be a story is that it's up again about almost 5% again today, which is interesting considering that AVGO is getting repriced lower and MRVL was still catching the AI infrastructure bid. So that's a really important divergence, including the divergence I've pointed out with NVIDIA. The market's not saying AI is dead. The market is saying that it wants the right AI infrastructure names at the right expectations. So now let's go on to the next sector, or at least the next ETF that I'm using as a proxy for a sector, and that's IGV. And again, not a true sector in the sense of the X's. It's thematic. And so the IGV was basically flat, down about, I think it, 0.14%, and trading. It closed almost exactly at $100, and that's actually stronger than it felt. And so that's another reason I wanted to mention it, because it's digestion at this point for me. It's not breaking, and that matters a lot for the names that I'm trading, but also just based on the technical shares, we finally have crossed above the 200 SMA on the daily. And if I put that on the daily, you can see that corresponds with this white line. But if I have it set so that no matter what chart I'm trading, that's still showing up as this dashed line here. It's not dashed, but it's a daily line. So it appears to be choppy. But what I really like is that when we have that first daily red bar closing above it and then stay above it, that's a great signal for me that people are changing their sentiment on it. And by people, I mean institutions. Couple that with the fact that I thought this was a Wyckoff accumulation zone and a breakout. I'm really liking that. I'm not playing IGV directly, but using it as a sentiment proxy. And I was actually trading a number of names, specifically now. SAP, which was a huge trade for me today. I'll break that down later in some of the target trades. And also Microsoft is a part of that trade for me. So now let's jump into the target trades for the day. So the first one is Microsoft, and I touched on this a lot in yesterday's video. And essentially, the intraday high was 435 and the intraday low is 426. And that matters a lot because it lines almost perfectly with the area that I've been watching. So I use a custom super trend here, and you can see that we came back down to the lower bounds of the super trend, which is generally where I want to start going in for a nice risk to reward. That being said, I've already been in. I'm holding a number of long shares in general for a long-term holding strategy, but I also have 2 call options. Actually 3 if you think about it. This is a different account. In this account I'm holding, here we go, 2 call options. In another account I've sold 2 cash secured puts below it. So I have a lot going on for Microsoft, and I also am holding MSFU. And I went through that in yesterday's video at length, but what I'd like to show here and why this is still a live trade I'm watching that I've architected, not only because you see how many shares and how concentrated I am on it, although concentration is relative to the overall portfolio, so I'm not quite that concentrated, is that the GEX picture was very interesting today, because yesterday when I showed it, we were in negative GEX on the near term, but positive GEX on the later dated. So what's happening here is that market participants are starting to change their positioning. And I love when stuff like that happens. It's an early sign to me often when we're in negative GEX on the near term, and in the medium and long term, we're in heavily positive GEX. But then when I see the near term trade change over, I take that as a signal that maybe other participants are starting to see a similar pattern there. So that's enough on the Microsoft trade, just because I covered it in length yesterday. And the GEX story is looking really great to me. But another one that I wanted to cover here is Meta. So Meta, I have a similar thesis on it. I think it's being undervalued in the market. In fact, actually, let me go back to Microsoft real quick because it still matter. If we look at the PEG ratio, the 5-year expected, I used to do this using Nasdaq because they had the forward PEG ratio explained in specific terms that they used. But if we look at it, what's most important here is that use a consistent metric and to understand what that metric is. But if we look at the PEG ratio, the 5-year expected here, we can see that Microsoft is trading at a 1.36 PEG, and I really like that. I'm very happy to pick up Microsoft at that, which is also a reason that I have long shares here. I have very long dated calls, and I'm also selling longer dated puts to get assigned at, I think my puts are at 360, something like that. I went through it yesterday, but let's just look at it one more time. These are 169 days out for the 360 strike, and I sold them for 1065. So my actual price would be my cost basis would be around 350, something like that. And I'm willing to pick up 2 lots of those. So that matters because when we look at Meta's got a similar story here. Meta is a little bit different on the charts, but it's resembling that trade, and it also has, but the factors are a little bit different. It was a CapEx story versus SaaS apocalypse. But if we look at Meta, we can also see that the PEG ratio is even more compelling to me personally. When it's trading at a 0.87 PEG. And again, even if you're just trading this relative to where it has been, and you can look at the last time it was trading, so that would have been last year in March. Let's see what happened after it accumulated for a while. At that time in March, I'm going to have to change my time frame to 3 years. And let's go back to previous Marches. So there you go. I mean, that's also the crazy part about this. Some people may have noticed this. Was last April and last March was the Liberation Day situation. And then almost exactly 1 year later was the ceasefire situation with Iran. So read into that what you will. What I'm taking away from it is that when it's trading at such a low PEG, I'm very interested in owning shares. And I also am approaching this, again, let me know if you want to get into true trade construction. I think it's different videos for sure, but I'm holding a lot of this. I have 125 shares in a long-term account here and a number of shares in a smaller long-term account as well. This is a long-term compounder. I don't think I'm necessarily going to be cutting it, but in certain accounts, I am actually trading this as a leveraged play. By today, I bought options on it. You can see I'm basically flat on that because I acquired it later in the day when we hit some of my reads. In fact, let's pull this up on the GEX so we can get a better read on how that's looking. Just bear with me here because pulling up GEX from your broker's API is a little bit slower in after hours, specifically right after the market closes. But Meta has some really similar GEX to Microsoft. It's a little bit more nuanced. So let me just pull it up here. While that's loading, actually, let's look at this chart further because we do see that head and shoulders forming. All right, here we go. The near term is not loading after hours. That's okay. Like I said, it was actually very similar. But we have some significant GEX growing. And also what I love to see here is tiered GEX like this. Market participants are expecting a lot of upside here, or at least positioned for it. You can't always read directly into this. You don't know what everybody's position is, but it is something that I like to trade. And so I'm good for some longer dated calls on this and some long-term shares, but that has less to do with an active trade and more to do with, I like this valuation. I'm happy holding that for 5 to 10 years. And then the last trade I want to talk about is SAP, because yesterday This was a trade I identified based on Microsoft, and it was also based on going through IGV and looking for some names like Asana. We were looking at, which has been oscillating for sure, ServiceNow, and Microsoft, as I just said, Microsoft, but SAP was compelling to me because its fundamentals are also really great, and it's been punished a lot. And what I really like about a name like this is how big the dollar moves are. When you're trading calls, it's very important, not just the ATR, but where you are relative to that ATR. And I like the upside story for this, and I can get into how we model those trades out, but I don't want to bore everybody with that. Some people just want to know the levels that I've been looking at. And so we're above the daily point of control, but I took this trade yesterday after we filled the gap. I put on 2 contracts. I have one still going here. They were at about 50 delta when I took the trade, and we opened up this morning at 191. And if you try to sell calls that are in the money, right at open, the premium is usually jacked. So if you calculate it on your own and willing to take profit there, that usually works really well, as long as it really was a swing trade. And for me, I look for catalysts with I'm generally stacking my calls. You can see a lot of calls are 2 or 3. And so the ones that are 1 generally means that I'm either sizing very smallly, they were part of a multi-leg trade and I've closed 1 leg, or I've been scaling out. And so SAP, I scaled out of 1, but I'm still holding because I still like the upside on this. But I do think that it's going to be a longer journey here. But I think we've reclaimed maybe this next level. So that's SAP. I was loving that. But all of these are essentially telling me about enterprise software, and AI workflow, mission critical customer base, high switching costs, all of that. And for Leap specifically, I like names where the business is not just pure hype, but where the AI productivity story has time to show up in the fundamentals. So SAP really is not a meme trade for me. It's exactly that kind of trade where, the company is strong. It's a really great enterprise software re-rating candidate. And it's like a re-rating because they were re-rated so much lower than I think was fair. And it's not even fair. It's just, I think it got it wrong and people are coming around on that. And we could see that today with IGV. Actually, this is a great reversal, to be honest with you. And I know there was a lot of people who are accumulating down here. You can even see it in the tape. Look at all of this volume coming in down here. There's a lot of interest for that. So now let's move on to what to watch for tomorrow, what I'm watching for tomorrow. So tomorrow morning is the key macro event of the week. And let's get back over to trading economics. Oops. Tomorrow, where are we here? There we go, non-farm payrolls. That's the big one. So the May employment situation reports drop on Friday at 8:30 a.m. Eastern. So the market's watching 3 numbers, really. It's the non-farm payrolls, the unemployment rate, and the average hourly earnings. And so the ideal number is still the soft landing number, not too hot, not too cold. If payrolls are strong, rates can push back against growth. If payrolls are too weak, recession fears come back. And if wage growth is hot, inflation fears comes back. So that matters directly for, most names, to be honest with you, but TLT, QQQ, SMH, Microsoft, Meta, SAP, those are all, things I'm watching and how they're going to react to these rates. But every long duration AI or software trade is going to be affected by this, as well as rates in general, TLT. And so, my read is simple for today. It wasn't a market that dumped. It was rotation. NVDA, MRVL, and, kept the AI infrastructure trade alive. And I'm focused personally on Microsoft, Meta, SAP for structured longs, as well as ServiceNow. I mentioned that briefly. And you can see my portfolio is actually this is one of the smaller ones, but it is quite large. So I can't go through all of the trades I'm looking at because even things like, healthcare is catching a bid, but I'm playing Pfizer there. And I'm also playing some really beaten down stocks, not for the week. And I've gone through how I'm playing those. But I'm watching a lot of different trades, and these were just the big ones to cover today. I'm sure everybody making YouTube videos for the benefit of other market participants to watch are also trading a lot of different things. So I can't get through all of them. So drop a suggestion about a ticker you'd like to see, specifically something in my portfolio. And question for everybody watching, how are you all feeling about Microsoft, specifically the targets I'm looking at, the support at 425 down to 420 or even 415 as an invalidation level. But I'm willing to stay until 360 and upward targets of, 450 all the way back up to 510, the point of control for the year. Let me know your thoughts on that. And again, thank you for your support, and please subscribe. I would really appreciate it. I've never done a call to action for please subscribe, but it'll help me as this channel is getting off the ground so I can keep bringing videos like this to you. Happy trading, stay safe, and I'll see you tomorrow.